When you hear the word blockchain, your mind probably jumps to Bitcoin, right? Speculative bubbles, maybe some weird internet money. But what if I told you that in one really dynamic part of the world, this tech is moving way beyond the hype and is actually being tested by governments and major industries? Okay, so let's unpack this story of how Europe and Central Asia became a surprising laboratory for the blockchain revolution. So, what was it about this region, from Estonia all the way to Georgia, that made it such a hotbed for this new frontier? Well, it turns out the whole economic landscape over there created really the perfect conditions for a technology that promised to do things completely differently.
I mean, just look at this list. You've got this perfect storm brewing. Trust in the old school banks? Totally shot after a bunch of crises. Trying to start a new tech company? Good luck finding venture capital. And if you were a worker sending money home to your family, the fees were just killer. On top of all that, governments themselves were desperate to modernize their services. It was basically a huge, wide-open field just waiting for something radical to take root.
And that something radical, well, it first showed up in a form we all recognize now: digital cash. The big idea that got everyone so excited was this concept of a peer-to-peer electronic payment system, a way to send money without a bank, without any central authority at all. And of course, that was the whole idea behind Bitcoin.
Before we get any further, let's just make sure we're on the same page. What is a blockchain? At its heart, it's really like a shared, unchangeable public notebook. Every time a transaction happens, a new line gets written down. But here's the magic trick. This notebook is copied and spread across thousands of computers. That's what makes it so incredibly secure. I mean, to fake a transaction, you'd have to sneak into thousands of places at the exact same time and change the same line in every single copy. It's pretty much impossible.
So how does this notebook actually get written in? For Bitcoin, it uses this thing called proof of work, and it's basically a giant race. When you send some Bitcoin, all these super powerful computers or miners start racing to solve this ridiculously hard math puzzle. The first one to crack it gets the prize. They get to validate your transaction, add it as a new block to the chain, and for all that hard work, they're rewarded with brand new Bitcoins. It's this clever system that uses competition to both keep the network safe and create new digital money at the same time. Okay, so it sounds great, right? A digital gold rush. But there was this huge, unforeseen catch. That whole proof of work system, the very thing that made Bitcoin so secure, well, it also made it one of the most power-hungry technologies on the entire planet. And this is where the story takes a really sharp turn. Okay, just look at this number, 53 terawatt hours. That's the estimate for how much electricity the entire global Bitcoin network was using in a single year. Now, that's a massive number, but it's kind of hard to wrap your head around, right? What does it actually mean in the real world? Well, here's what it means. The Bitcoin network, this digital currency, uses about the same amount of electricity as the entire country of Bangladesh. And we're talking about a nation with over 160 million people. That comparison it really puts the staggering scale of this energy problem into perspective. All that power just to solve math puzzles.
And look, this wasn't just some number on a global report. It was having very real effects on the ground. Let's take Georgia, for example, one of those countries that jumped on the crypto train early. The World Bank found that the crypto mining boom completely flipped the country's whole energy situation on its head. Get this. In Georgia, things got so wild that up to 5% of all households were mining crypto. It became so popular that the whole industry ended up sucking down between 10 and 15% of the country's entire electricity supply. It created a nice little economic boom for some, for sure, but it put this absolutely massive strain on their national power grid.
But, the story doesn't just end there with this super flawed, energy-hungry currency. Because the real revolution, the thing people are now realizing, wasn't really the coin itself. It was the technology underneath it.
So you've got to be asking, right? If Bitcoin was so problematic, why are governments from Estonia to the European Commission still pouring millions into this technology? What were they seeing that the rest of us missed in all the hype?
Well, the answer is this amazing concept called a smart contract. The best way to think about it is like a super smart vending machine. You put in what's required, maybe it's money, maybe it's just data, and the machine automatically spits out whatever you're supposed to get. No cashier needed. A smart contract is basically that, but for agreements.
The rules are written directly into code on the blockchain, and it just runs itself. It completely cuts out the middleman.
And here is a fantastic real-world example of just how powerful this can be. Imagine you're a farmer and you buy drought insurance. But instead of some complicated legal document, it's a smart contract. The contract is linked up to a trusted weather feed. If the rainfall in your area officially drops below a certain level, boom, the contract automatically pays you. You don't have to call an adjuster, you don't fill out a single piece of paperwork, and there's no waiting around. It's instant, it's transparent, and it's just unbelievably efficient.
And that is exactly why governments are getting so excited about this stuff. We're seeing countries all across the region, Estonia, Georgia, Ukraine, they're running pilot programs using blockchain for things like land registries to cut down on corruption and just make things run smoother. You've got state-owned banks in Russia testing it for payments. The European Commission is even funding a whole blockchain observatory to figure out how to use this for public services. The game has totally shifted from making new kinds of money to building new kinds of trustworthy systems.
So what we're really seeing here is the technology growing up. You know, that initial Wild West phase is starting to calm down as developers and big institutions are figuring out how to fix the early problems and actually adopt blockchain for the real world.
And one of the biggest changes is this difference right here. Bitcoin's blockchain is what we call permissionless. Anybody in the world can join in. It's totally open. But these new systems that governments and corporations are building, they're often permissioned. Think of them as private, members-only clubs. There's a limited number of trusted participants. And here's the big trade-off. You give up a little bit of that total decentralization, but what you get in return is a system that is way faster, way more secure, and doesn't guzzle energy. It's perfect for things like managing a land registry or a company's supply chain. So with all this change, how are governments supposed to handle it? Well, the World Bank is basically advising a walk, don't run approach. On the one hand, they're saying, hey, don't crush this thing with regulations right away. Give the tech some room to breathe. But they're also saying, be really clear with people about the risks. And as the tech gets more serious, make sure it's competing fairly with traditional industries. The mantra they're pushing is pretty smart. Think big, start small, quit soon, and scale fast. And all of this brings us to the final and I think most fascinating question. Think about it. The internet revolution gave us all these amazing new services, but it also created these monster tech companies that basically control all our data. The ultimate dream of blockchain is that it could flip that script. So the real billion-dollar question is this. Is blockchain going to be the thing that finally breaks up the data monopolies of today? Or is it just going to create a whole new generation of gatekeepers? That is the answer being written right now, in code, in government policies, and in boardrooms all around the world.